Good everyone, this is Channel Crypto. Welcome to my channel. If you're new here, please click on the like button and subscribe as well. Okay, so this is a candlestick pattern series, and in the video I did earlier, I explained what the candle pattern is, what the candlestick is, the essence in a price chart. Okay, so I explained all of these patterns in the previous video. Patterns are simply a certain way a candle will be formed, and it tends to predict the next movement in the market. Okay, if you see a certain pattern, then something is expected to happen in the market. Either price goes up, or price continuing the same pattern, or price continuing the same direction, or price changes direction. But today I'm talking on the piercing pattern. Okay, there's a whole lot I'll talk on as well, but we'll start with this now. The piercing pattern often end a minor downtrend, so I won't be using most of all these write-ups. You can do them when you watch, but let's go straight to what we have. So now we have the piercing pattern. For this pattern, in a downtrend, is when price is going down. Something like this happen, you have a red candle, then you have a green candle that opens close to the top or the high of the red candle, then it goes down and covers up and goes more than half below the red candle as well. This can be seen as a piercing pattern, and it signals a bullish uptrend. You can see after this pattern appeared, the price went up. So the next one, you have the evening star. This occurs during the sustained uptrend. Okay, so an evening star happens in an uptrend when price is going up. Then we see this and price tends to go down. So for an evening star, it's something like this. Price has been going up, so you get to this point, then you see this is like a doji. You can see. So after this big bullish candle, then we see this. Remember, the candle must close like this, then will now form. So price went up, but price went down back. Why? Because sellers were pushing the price down, shows selling pressure. So the candle no longer has a body. Then you can see that a big red candle forms. So you watch later along the line, price went down. Okay, so this shows high selling pressure. If this is happening, you are seeing price, you are seeing a candle, we are seeing the size of a candle reducing up to this level, but the candle hasn't closed yet. Don't rush and place a sell order. Wait for the candle to close, because the candle might go down like this and still go back up. Okay, so you have to wait for the candle to close first. Wait for another candle to form. If the candle closes like this, then you can watch. Maybe wait for a confirmation. Wait for this candle to form as well. Then if you have other confirmations you can use, confirm very well before you place your sell signal. You understand? So that's an evening star. Don't really get, it's not a must to get familiar with the names, just understand how they work. Okay, so we have the morning star. Okay, so this shows a reversal. Okay, this shows a reversal. Now for evening star, you have a big red candle, then you have a doji, a very small doji, then you have a green candle. Okay, so an evening star, you can see an example here. Let me zoom in. Price was going up, then you can see this. Remember, all candlestick patterns might not appear the way that you are seeing them in the definition. So this is a real price chart. I can see how this appeared. It did not, they say a little body on the candle, but it's the same thing. So you see price drop like this, but then sellers push the price up and it has really a little body. Then you might be hoping for a buy signal, because price might go up. Okay, usually the candle closes like this, then you see a bullish candle, a very long bullish candle closes above this MA, then you can place a buy signal to continue. Okay, the close of the candle is very important. The candle must be either the 4-hour or the 1-hour candle. Okay, so let's proceed. Now we have the shooting star. Shooting star can appear only at a potential market stop. If a shooting star occurs After a candle with a large jury body typically is much stronger than a warning, it shows the price cannot sustain such high levels. Okay, so when price has gone very high and it shoots stars appear, it means that price cannot stay that high, price has to go back down. This is what a shooting star looks like. Sellers push the price down to have a little body left. Now for example, you can see this shooting star, price went this high, then got to this point, then sellers push the price down from this height down to this point. So when it got here, it closed like this. So this is a very clear indication that price is about to drop massively because there's a whole lot of sellers in the market at this moment. So you can place a sell signal after this closes and you see a red candle forming down. You can place your sell signal be around here and your take profit target will be around this MA or this second MA. Okay, so you make a very successful trade after using this, after seeing this heavy push down in price. Okay, so this what do you call it, the shooting star. I am not really familiar with the names. I really understand how they work, and that's what is important. Okay, the next thing here we have the inverted hammer. Inverted hammer can only occur after a sustained downtrend. Okay, so we are having a downtrend. Okay, this is what an inverted hammer looks like. You can notice that most of all these patterns they look alike, but the application is different. Some are in the downtrend, some are in the upper trend. So I think that's the difference. So if you zoom into this, you can see the inverted hammer here. Here is an ideal downtrend. It got down here. You can see that price push, but there is still a body left. So this shows that there is still buying pressure in the market after this massive fall. The price could not continue to fall. After the sellers pushed up to this point, the buyer still had body, a candle body. So it shows that buying pressure is coming back into the market. So you can see this other big green candle followed, then it will test a bit before going higher. So an inverted hammer shows that the price is about to reverse and go higher. Okay. So next we have a bullish harami. Now candle can occur in either bullish or bearish trends, but the colors are reversed. The black large body precedes a smaller white body, and this gives a bullish, and a smaller red body. Okay, all this aside, now for this bullish harami, you can see a big red candle. We have a smaller green candle. So this can show a buying pressure to the upside. Okay, so if you see a very big red candle, but then you see a green candle that is within the red candle. Okay, within the red candle, is not lower and it's not higher, it's just within. It shows buying pressure, price about to go higher. Okay, remember, don't just use only this candlestick pattern to place your trade. Make sure that you have other methods to confirm that it is actually in the right direction. If you get me. So candlestick pattern can only be used as an extra confirmation of a trade before you place them. Okay, so here we have the we also have the bullish harami, but this is in reverse. Remember, in this other one, the red candle is here, then we have a small green candle it's in this big red candle, so it shows bullish pressure. While in this other reverse, we have a big green candle, we have a small red candle, so this shows a downtrend. Okay, let's zoom in. You can see bullish pressure, but then you see this big green candle, you see this very small red candle, you see this sudden drop. Okay, so this an example of bullish harami, the reverse. So the color was different. So if this was green, sorry, if this was red, then we have a green candle here, then we might be seeing an uptrend. But since this is green and we have a red candle, I'm seeing a downtrend. So the reverse is the case for the bullish harami. Now up to this one, this means a closed crop. Typically, this is a long candle that implies a day's trading range has been large. Okay, so this shows buying, strong buying or selling pressure. Okay, so you can see very big candles, very big green candle in the chart. Consider that the buying pressure is very high. I would say a very big red candle, consider the selling pressure is very high. So the main thing is that it closes, it closes at that very high height. Okay, it closes at that height and it opens. It also close. There is no wick in this candle. Okay, it shows high buying pressure. Now for this chart, sorry, for this chart, you can see an example of this. This very long bullish candle shows high buying pressure, and you can see how price skyrocket after the formation of this candle went high, very high. So seeing candles like this that doesn't have a wick, whether green or red, shows high buying or selling pressure. If it's red, shows high selling pressure. So all your trades should be going short. But if it's a big green candle, it shows buying pressure. So your trade should be going long. Okay. Now we have spin top. Okay. For the spin top, the shadow are relatively small. Sorry, relatively small, and the candles has a very small range when combined with low volume. Traders may be expressing disinterest. Okay, so spin top are candles that has small um bodies. Okay, small bodies. You can see an example of this. Technical analysis will often watch for spinning top high candlesticks and then join the sidelines. After such volatile session, traders will often wait for the additional confirmation of a downtrend or an uptrend. Okay, so this spinning top shows indecision, confusion in the market. Like buyers and sellers, they are fighting, they don't know who will take over. So that's why having this very long week. So buyers are trying to push the price up here, or to push the price up, while sellers are trying to push the price down, and the candle closes like that. So it shows a spinning top. So um normally after a spinning top, whoever wins the battle wins massively, because if buyers win the battle, price will go higher and all the sellers will go in, and the sorry, if buyers wins the battle, price will go higher and all the buyers will go in. Some sellers might even buy as well, so you can say that price will go higher. But if sellers win, price will go lower, and you see that the buyers will also start selling so that they won't be trading against the market. You understand me? So when you see something like this, you just have to wait for an extra confirmation before you buy long. Okay, so if you see this after a down, then you see a spinning top, long wicks up and down, then a small body was green. Okay, you have to wait, maybe check your volume or check the indicator you are using. And you see on that green candle, maybe here you can place a buy signal, then you can ride it all over to the top. Okay, so all these are um, buying signals or selling signals these patterns can give us. So high wave candle, on the other hand, portrays, okay, this portrays a situation where there is an active tug of war between the bulls and bears. This candle shows the market has lost a clear sense of direction. If it occurs on a high volume, then it indicates that market's general confusion about the direction of price are headed. Okay, so this shows, this is like spinning top as well. It shows a confusion between buyers and sellers. They don't know which direction that price wants to go to, so they are just fighting their way through. So it shows high level. Now let's look at some of the class specifications. High wave candle shows confusion among traders. Self the body shows lack of consensus. Okay, it's the same thing. The case and early sign of possible shift in the current trend. So whenever this happens, buyers and sellers are trying to choose which way the market should go. whoever wins will change the entire trend of the market. The market might be going up before, but if the sellers win, the market will start going down, and it will go down massively because everybody will start selling. Okay, so so these are example of spinning tops, then highway. So they are almost they are in the same family. Okay, spinning tops can be like this, can be like this, can be like this, can be like this, can also be like this. But the main thing you should notice that they have long wicks and they have small bodies. Okay, so when you see candles like this, know that the market is about to make a major move, either to the uptrend or to the downtrend. Okay, so now SF high wave engulfing. Okay, you can see this example of a high wave or a high wave candle. Remember I said that I see price has been going up, then we see this long wick, small body, then price started going down, 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 down. Remember I said that it changes the overall trend of the market. Okay, now so we have another one here. We have the three black crows candle formation. So this does not happen very frequently in stock trading, but it occurs. Swing traders should be very alert to the cow crows. And the candle's metaphor is three crows sitting in a tall tree. On the day the first black crows make its appearance, the formation is most predictive. If a crow or that candlestick closes below or above the previous candle body. So what it's saying is that these are three big red candles, and it indicates a downtrend. Okay, in case a downtrend, you can see this red, then this candle closes almost at the bottom of this one. This one closes here, then this one opens at the bottom of this one and goes lower. This one goes lower. So this can be a major game changer. Price could really go down after this happens. Okay, like I said, you can see that price was going up, then these three black rows of three black rows. So this big red candle, we have another one, then we have another one. Then price tried to retest a bit, but it failed, and price went down massively. You can see the effect of this. This is a whole new downtrend because this was a high, this point is a high, but then it broke it and went lower. And so that when it got to this point, he was trying to retest a bit, but then it went lower. So a three black crow, three crows is very important, something that you should watch out for, because if you had entered a sell trade around here, or if you like to wait for a retest, then you enter around here and you shot down to this point, or maybe this point, you'd have made a whole lot of profits from this. Okay, now so we have a three white soldiers. So these are is typically an opposite of the three black crows. Okay, these are opposite of the three black crows. Here, after this occurs, there is normally a shoot to the upside. And I can see price was just consolidating around here, but after a while we see this, then the price will always retest. After the retest, price shoots to the upside. So these are things that we should always watch out for when we trade. Now another one is a tweezer formation. This also involves two candles at a tweezer top. The high price of the two nearby session is identical or very nearly so. In a high price stock, there may be a few cents variation, and I believe it should be considered as a tweezer. Okay, so how does this works? Okay, this shows when we have a green candle, we have a red candle. Okay, this for the top, and this for the bottom. So we have green candle here, you have a red candle here. If you see this at the top of an uptrend, it indicates a downtrend is about to happen. Why does it indicate so? It's because after every massive shoot there is always a retest down. Okay, but then if that retest goes below the green candle, then it might continue down. Okay, so an ideal retest should just be around maybe here after price went up, but this one goes down and touches almost here and closes like this, then another candle opens below here. So this shows an ideal down down movement. Okay, let's just read a little of this. So at the Tweezer bottom, the low price of the two sessions, sometimes some instances the Tweezer bottom is formed by two real candlesticks bodies that make an identical low. In the other instances, lower of the two lower shadows of the nearby candles touch the same price levels and stock then bounces higher. The possibility is that the lower candle of the other day, same thing, the candle, this green candle now, the red candle falls as low as the bottom of this green candle. It might retest a bit, but it closes like this. The other candle forms lower. It shows a downtrend. So this for the top. Now this for the bottom. It goes down here. Then you see a big red candle. Then price goes high and touches the top of this candle. Then we test a bit. It shows that selling pressure is coming into the market. Okay. If you come around here, it's the same thing. Price was going up, then you see this red candle, then it came and it touched down, then it closed like this, then price started going down. So let's go over to the other. We have a stick sandwich. Now this occurs during a downtrend. Confirmation is required by the candles that form the pattern. First candle is black, it has a short lower shadow, or it does not have a lower shadow at all. Second candle is white, it has open above the close of the first candle, while the third candle is black. Okay, so this shows, okay, this occurs during a downtrend, but it shows let's see this. So we have sorry, this shows bullish pressure, but this shows so we have a red now, red candle here. Then we have a green candle here. This candle closes, kind of opens above the low of this other candle and closes above it, but then after it closes there, you have a very big red candle. Red candle now shows a downtrend, okay, because price was low, but price tried to go higher. As it went tried going higher, it failed and it came down even lower than the previous bullish candle, and it closed lower, so price is going to go down. Okay, so it occurs in an uptrend and it shows a selling pressure. Now this occurs during a downtrend. You can see a green candle here, then a red candle, then we see this candle opens below this bullish candle and closes below it as well. But then for price, because price should be going lower, but then price opens here. Sorry, it's a bullish candle. Price opens here, and price is supposed to go down. since it's a bearish candle, because this is a downtrend. Price opened here, it's supposed to go down, but price started going high, then went above the previous bearish candle and it closed above it. So it shows a bullish signal. Okay, you can see up 62%. So there's a possibility that the price is going to go higher since that's closed above this bearish candle. Now we have the dumpling top pattern. So this is a signal for bearish reversal of the current trend. Okay, so this shows that maybe price going high, then price will start going down after this dumpling top appears. So this shows in an uptrend, then it becomes sideways and all of that. So this is how it works. Have bullish candles, price going higher, but then you see a doji, then this looks like a spinning top though, but there's a little body there. There are wicks doji. So all this area now, price is consolidating. From this point till this point, price consolidating, meaning that price and buyers and sellers, they are bouncing, they don't know direction to go. So sellers trying to buy, they are trying to sell. Okay, so for if this is a 1 hour candle for 5 straight hours, sellers and buyers, they could not decide which direction price should go to. And after they finally decide, price went down. Okay, you can also decide price goes up. It all depends on who is stronger at that particular time. For a dumpling top, you see a bullish signal, then you see a lot of consolidation, and it's most likely signals a downtrend. Now you can see this bullish, then go to this point, you see consolidation. Buyers like they're trying to know direction to go, but then price goes lower. Okay, so that's how this dumpling top works. So another we have is the fry pan bottom pattern. It should be normally a sign of a bullish reversal. So this, we have price going down. All of a sudden price started consolidating and price started going up. So this is an opposite of the doubling top I just talked about. So price going down was consolidation and price started going higher. Okay, then toward top pattern, it occurs during an uptrend. So after this uptrend, we have 3 small candles. All this looks like spinning tops. You have a small body, then you have weak. So this shows a confusion in the market. So after this candle formed, another one formed here higher, but instead of price should go higher, another one formed below this one and it closed like this. So price tends to go down. So you can see an example here. Price was going higher, then this. Remember, the wicks can be longer, but the point remains the same. Okay, so we have this, then this. Then the price to go higher, price formed below this. Selling pressure pushed it down. So we have a massive sellout in the trend. So I think this is the last pattern I'll talk about in this video. Okay, so we have a tower bottom pattern. So for the tower bottom pattern, we have price going down, but then okay, it's like an opposite of the other of the tower top. So you have a consolidation here, then we have a bullish signal. Okay, so price going down, then consolidations, then we have a big green candle. So this will indicate that the buyers have finally decided. So you can just draw a box on this the areas price are retesting. Okay, so after price closes above it, then you can place a buy signal to go higher. So bullish mass hold. Okay, this occurs in an uptrend and it's required that the candles follow the pattern. So this, okay, this shows an uptrend. Now we have bullish candle, then we have sellouts. After this sellout, there's always a bullish continuation. So this shows a bullish continuation. This is a bullish continuation pattern. Why this is the bearish version of it. So we have a sell candle, we have price trying to go higher, but then price fails to close above this candle, so price goes lower. So this is an example. So price is not up to that 3. So price went high, then we have a little sell out, then price went higher again. This for the bullish pattern of it. So this is the okay, it's also bullish. Price was going higher, then you have a little consolidation, but price also went higher. Okay, so this will be all I'm doing for this video. Subscribe and turn on your notifications so you'll be updated when next I will do the next video. I'll be explaining more patterns we should get ourselves aligned with. Okay, this channel crypto, smash the like button, share and subscribe. Okay, thank you.